Welcome back to the Daily Doge. Today we're doing technical analysis on the S&P 500 price prediction and Dogecoin technical analysis, specifically Elliott Waves. So we'll be looking at the Elliott Waves for Dogecoin and the Elliott Waves for the S&P 500. And since this is live, I will be doing anything that you want to see, any symbols that you want to see the analysis for. Let me know in the comments live. And if you're watching this in the replay, let me know in the comments and I can do it in a future video. All right, so first we're going to do Dogecoin, and before I get into it, I want to make an announcement that I'm going to put it in the comments now. The live videos. Hey Maggie, how's it going? Thank you for tuning in. And thank you even more for commenting. Awesome. So I want to make an announcement that I'm going to be moving this channel, the live technical analysis videos. I'm moving them over to another channel because this channel was originally about health and wealth. And then people started asking me, oh, thank you for the thumbs up, whoever did that, I appreciate it. So people started asking me, I did a couple technical analysis videos just as an experiment, and people were asking for more and more of them. And they're calling me the Doge Guru and the Doge Master and stuff like that, which I'm not claiming to be. I'm just reporting what people said. And I'm flattered, by the way. Thank you. But that's a good point. That's a good timing for a disclaimer. I'm not a licensed financial advisor, so this is not financial advice. I don't even think Dogecoin is technically an investment. I talked about that in other videos. So the S&P is much more of an investment than Dogecoin. It's much different, but we can apply the same exact things to them. The same Elliott waves can apply to the stock market and to crypto. That's one of the very useful things about it, and the Elliott waves are based on human psychology and mass psychology. So that's what this technical analysis is based off of, and how I've been predicting things and blowing people's minds. So stay tuned. And oh, okay. People are commenting. Thank you so much for commenting and tuning in. It's good to see you live. I'll talk to you later. Awesome. Thank you so much for the likes. I appreciate it. All right, the Daily Doge. Let's get into the technical analysis. Right now, as you can see on the 30-minute, we crossed over the different moving averages back here. So as I told some of you the other day, and did I say the disclaimer already? Can't have too many disclaimers. That I was buying right here, and also on a couple of these dips back here, maybe around here. I talked about this in the previous videos, and I had been circling these. You can check that out if you want to. Also, if you're just tuning in, I'm moving these daily live streams over to another channel because I think it's confusing the YouTube algorithm. Because I've had my channel for 7 years, and then I started suddenly doing technical analysis videos daily. Which is great, and I will keep doing them. Don't worry about that. So I put the link in the description or in the comments of the new channel. So make sure to subscribe to the new channel for the technical analysis updates. All right, it's a brand new channel. There's no one subscribed yet except for me. So it's we're starting out again, but I think it's a good decision, even though it was a hard decision. I knew I had to branch it off and do a new separate channel eventually because it doesn't fit with all my old videos. And my old videos are getting a lot of views still, and people are probably confused, like, what does this have to do with each other? Well, it has to do with each other because it's me, and that's what I'm doing. So I drew this a couple minutes ago. We've just been going sideways for the last day. Look at the 15-minute. All right. And I think this is just some kind of A, B, C, D, E. Actually, if the subwaves, it's a triangle. Do you see it? Do you see this? Anyway, it's not a perfect triangle, but it's a... This is one... Oh, actually, maybe it is a perfect triangle. I just didn't draw it perfectly. So it might try to bounce again, but if it breaks down and then comes below the 200 moving average, then it could get another little wave down, but I'm not too worried about that. It's just these as this correction goes on and on and on, the sideways action is just going to go on like this. And it just gets longer and longer sometimes as it goes. So if we look back at some of these shapes, some of the patterns that we were seeing at the beginning of the correction, well, this is more than a correction. This was, so far it went down 78 or 78.786. So that's 78.6%. And this line down here is the 0.786 Fibonacci line. I talk about this in my other videos, and I have a module about it in my program. My program is still in pre-launch, but there are a couple spots left in the test group. There are some people in it right now, actually. They might be watching even. So there's a lot of new stuff going on. I'm really excited, but let's stick to the technical analysis. There's 3 waves down, 3 waves sideways, and 3 waves back down so far. And then now we're just, it's just dragging on and on. This is basically the feeling that you get in one of these corrections. And see the tiny little pattern I had drawn down here? Look how tiny it is in the scope of this entire correction. And this correction is kind of tiny in the scope of not the daily. Well, actually, the daily, yeah, it's a decent sized correction getting there in the daily, but on the weekly, it's just a little baby. And look at the monthly. It's a blip. So one of my subscribers pointed out the other day that, and yes, this is a really important thing to note when you're talking about Elliott waves, which we are talking about Elliott waves. So if we go back to the daily and turn these back on, Oh, you're about to get a free lesson. Again, I've given so many lessons on Elliott waves that, but anyway, 1, 2, 3, 4, 5. That's a classic impulsive wave. Bull market. When people say bull market, this was a bull market. 1, 2, 3, 4, 5. But let's turn these back off. But let's go back to the monthly. Look at that. It's tiny. So what is it? Well, it's always... Okay. Let me get rid of this. See this here? That's what I was going to draw. It's always a 5 wave somewhere. So this big wave that we could be in right now, this big, it wouldn't be that big. Something like this. Yeah, there we go. Something like that. I probably had measured that. Oops. But I'm just moving it to maybe be, might be a different shape. Okay, so let's say it's going up to $2. It's not going to go straight to $2 like delusional people are just because you put money in doesn't mean you're going to magically get actually currency, not even money. So if that was just, let me turn these back off. If that was just wave 1, we're in wave 2 right now. And then I wish I could erase some of it, but and then let's say wave 2 could drag on and on and on. But let's say it's quick, and then wave 3 is like this, and then wave 4 might not come down all the way, but wave 4 can come all the way down to the top. The previous top, which was 74 cents-ish. So it could come back down to that and bounce off, and then there would be another wave. And these waves will have subwaves. Where? It's the twilight zone where everything is a crazy fractal of mathematics. So right now, if we zoom all the way into this, let's go back to the weekly. If all of that was just wave 1, and then this is wave 2. So when is wave 2 going to be over? Well, that is difficult to say because corrections, well, we've got the 200 moving average looming down there. I'm going to move my buy zone to that. Ooh, crikey. Some people aren't going to enjoy if it goes all the way down to 5 cents. They are going to be... Let's face it. People are not hodling because this is the fact. The waves are the fact of what's happening. I'm not making any of it up. It's right there, and I'm just charting it. So this chart is the real fact, is the price, is the people buying and selling, the market. We can't really argue about the price. It is what it is. Does that make sense? So what I'm doing is charting the waves, because the Elliott waves can be predicted, but I mean, even so, the corrections are difficult to predict. In a nutshell, that's the basics of Elliott waves. Now, there are different corrections. This isn't the only shape of correction, but this is not uncommon. I mean, this is a common occurrence. This isn't anything abnormal. This is totally normal for it to come all the way down from 74 cents to 15 and then 18 or whatever. So if you understand how it works, then it's not 100% foolproof, but for me, it's extremely worthwhile, obviously, or I wouldn't be doing it. And, you know, a lot of people were asking me to make more and more videos, so I think people want to know. I think I think everyone wants to know, like I do, what's going to happen next. Even if it's not 100% foolproof, it still gives us a lot to be able to predict off of. For example, I was a little early when we hit the top back here in, let me zoom out on I'm going in and out of the different time frames. I'm using TradingView, by the way. I have a free video on this channel about how to set up TradingView, and also more videos like that in my course. If you are interested in getting in on that beta test, reach out to me on Instagram, or I have a new free Facebook group where I'm going to be posting. So tune into that for sure. There's a link in the description of this video. So let me move this a little bit, just making it perfect. Okay, so back here when we hit the top, I had a video out that said, where's the paintbrush? I had a video out right here, right after this, and I said, the title was that the top? Because I was counting these Elliott waves. And they were, you know, sometimes they're challenging 1, 2, 3, 4, 5. But now I can see this one has 5 subwaves. I should change the colors of everything. Let me change the colors of these so you can see the difference. Did that help? Okay, so this is 5 waves right here. Let me get rid of that circle. This is 5 waves right here. The whatever color this is, blue. If that's right. That's a subwave of, if we zoom out, it's a subwave of that whole previous, if we go on the daily, can you see it on the daily? Suddenly we're slow here. Okay, so this whole wave going up, getting messages. Okay, this 5 wave going up, that's the wave. That's one wave. But if we zoom in, which by zoom in, I mean go on a shorter time frame, so we can see more of the candles. And this is not helping. I want perfect internet. I will not tolerate failure. All right. So this whole wave going up was one wave. Remember? There's a wave back here. Part of it is back here a little bit. See, right off the screen is wave 1. This was wave 2, this long, drawn-out, extremely boring sideways action was wave 2. Then we had wave 3 right here. Wham! Wave 3 was very powerful, up. Wave 4 was a classic ABC correction. And then wave 5, oh yeah, I was riding 5 wave. The bottom of wave 4 went down actually to like 13 cents on some platforms. That was a juicy morsel. So if I got in on that, luckily. That was one that I was awake for. And it ran up all the way here, and I had a video that came out where I said, was that the top? Because I was trying to count these waves going up and get the 5 waves up, and it was not the cleanest 5-wave structure, but now in hindsight, if I turn these back on, now in hindsight, so this is wave 5. You can see it with the gray line. See this? Let me know if you have a pulse and comment if you're watching. It's weird, it's just talking to myself in a room. But let me know if this makes any sense at all. That's the wave 5 of that whole big wave. And then I broke it up into 5 subwaves right here. And I broke that up into, what are the subwaves of a subwave called? They're either called microwaves or mini waves. And you can go in and in and in. If I zoom in on that one, I can probably find the waves inside of the mini waves. And it's all repeating like fractals. That's how I'm able to trade pretty darn well for just looking at a chart. There's a lot of info here that now the correction is more difficult because it can drag on and on and on. You can have a double correction. You can have a triple correction. So there's something called a double threes or triple threes. That's what we had so far. Triple threes, big waves of 3. And since I didn't see any little 5 waves anywhere, there was no 5 waves to be seen anywhere in there, like zooming in and everything. Well, it's because it's waves of 3 in the correction, in this correction. So there are different types of corrections, which that's why, it can be annoying to trade a correction. And I'm not necessarily recommending to trade right now. I am, so doesn't mean it's right for you, and I'm not recommending it either. But I'm doing it, and people are asking me for more videos, so it's a good situation for both of us. It's fun to make the videos, actually. I like it. As long as people are enjoying it and getting value out of it, I will continue. But I am moving these live technical analysis videos to a new channel. I put the link in the comments. So make sure to subscribe to that other channel, because starting Sunday, I'm going to be going on that new channel. The Daily Doji is going to be the same exact show as right now, but I'm going to be doing it on that new channel, because this channel was originally about health and sometimes about business, but not straight up technical analysis. So the technical analysis stuff will be on that new channel. Please subscribe. There's no one right now. There's only like 2 people. All right, next is the S&P. If you have any questions, let me know in the comments. Okay, so yesterday I had drawn a hypothetical pattern well, this is a different shape of correction. Or that could even be one wave in a bigger correction. It ends up being something like this. I have to, wait, let me fix that, hold on. This would be, and right now I'm just eyeballing it. And I mean, sometimes my eyeballing it ends up being extremely accurate, but this is just hypothetical pattern. And, you know, they might not all exactly nail these Fibonacci lines, but something like this might happen. And this is hypothetical right now. I'm just showing you kind of what the thing I'm kind of expecting. The news is not going to know about any of this. They're going to squawk about whatever headline. Okay, that would be a better pattern right there. I like the look of this. And then, of course, these would have subwaves too, but these might have waves of 3 in the wave, and those waves might have a wave of 3 inside of them. Does that make sense? If it doesn't make sense, let me know your question. Don't feel bad about not knowing this, because what I'm finding out is that almost no one knows anything about this. No one's really talking about this, and I think maybe it's just going to go up to like 70 or 4,500 or so. Why do I think that? Well, let's look at the weekly. Okay, let's look at the monthly and turn off the drawings. This is the monthly chart of the S&P 500, all the way back to 1872, the year. This is the chart all the way back. That's pretty impressive to have all this data at your fingertips. Back in the day, you used to have to chart this using paper and pencil. Isn't that crazy? Respect to all the people that did the technical analysis before computers. Wow, insane. So as I can see right here, there's a wave up, and then we had, I circled it the other day. What I circled right here was one correction. It's an ABC correction. But that was both the dot-com crash in 2000, 2001, and then also the quote-unquote real estate bubble, or the Great Recession, or whatever they called it, in 2008 and 2009. I remember especially that one. And now that I look at it after learning Elliott Waves, I see that that was just one correction. ABC correction, that's a typical. So I think this was the next correction. This one looks a little different. And this one right here where the circle, this kind of correction is more like A, B, C. It's an expanded flat. I talked about this in my other videos and in my program. And then right now, what we're on right now, let's go into the weekly just to look at this final wave up. So I can see some kind of 1, 2, 3, 4, 5 right there. 1, 2. 1, 2, 3, 4, 5, I think. I think there's going to be a wave 4 that people are going to think is the crash. But then it's going to go back up one more subwave. It could go all the way up to 5,000, maybe. I saw, after I've been saying this, I saw like one of the big banks or something, like I don't know if it was JP Morgan or something, said they think the S&P is still gonna go up to like 2,600 or something, and I was like, oh, that's almost exactly what I said it was gonna do. So what about after that? So I mean, yeah, there is some upside still left. Like if it goes up to like 4,600, like whatever bank or whatever said that you've got from here, you've got like $300 out of 4,000. I don't know. I would not be getting in right now personally, and that's not investment advice. That's just what I would personally say for myself. And whoa, and these signs on the RSI are just like wah, 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 wah. Horror, horror, horror. The next one, if it keeps going up and this keeps coming down, oh, people are going to be like, oh yeah, it's just going to go up forever. And the RSI is going to go down. No one's going to be paying attention because the price is going to be going into fairy tale land, which it already is. And then what? What happens after fairy tale land? What happens is some kind of correction. So it could be broken into subwaves of 3. It might not. It might be subwaves of 5. But it will go down, something like that. And we'll probably, in the meantime, I mean, this will take, I mean, I just arbitrarily drew this line down, but just kind of where I see it making a decent shape on the monthly chart. And that makes it September 2028 or so. This might just be making one wave down. Like when people say, people have been saying for years, a huge crash is coming, blah, blah, blah. It's going to last 20 years or something like that. Well, now that I know how to do technical analysis, I mean, I've been hearing that for 10 years or more. I've been hearing for probably 10 or 15 years. Well, there was a crash right here, but then this looked like maybe it was another top to some people. Some people said that it was going to be in 2018. But if you look at the Elliott waves, those were just sub-waves. Those were corrections inside of this massive wave up. And yeah, the 5th wave can go up more from here, but we're towards the top. We're towards the top of the top. It might come down a little and then make one more wave up, like something kind of like this-ish. And then this would come down from up there. Let me delete that arrow so that it makes more sense. So this was one, see this little correction in the, and then this would be the next correction. 1, 2, 3, 4, 5. It's still, the S&P is in a totally different cycle than Doge. Of course, they're totally different. So something like this might happen, and then I would raise my, I would raise the Fibonacci line up to there, because that's what we would be measuring. So then this would fall somewhere like to there. And I will be shorting and shorting. The more it goes up, I'm already shorting a little, actually, the S&P, but there's some kind of fund that's an inverse short. Wait a minute. An inverse leveraged fund called SPXU, I think. And it's an inverse, oh yeah. There's also one called HIBS, but I don't think that's, I don't know if that's the one I'm using. And it's an inverse bear fund that's like a, if the S&P goes down, it will go up. So that's one way you could do it without having options. Not that I'm recommending it, I'm just saying that that's out there. Someone said, G Goose said, what do you think about the actual pattern 4-hour view of the S&P? Okay, let me look at the 4-hour. Thank you for asking. The 4-hour on the S&P, I see right here. Keep in mind, this is all wave 5. One, two, three, four, 5. It's a pretty short wave 3, but we'll go with it. And then this is ABC. Doge? Oh, Doge. All right, let's go back to Doge then. Wait, I have Doge over here. Here's what I think. It's making some kind of obnoxious triangle. Why are the triangles obnoxious? Well, the 4-hour? Oh, the 4-hour? It's not even a triangle. Yeah, it's just a blip on the 4-hour. I still think it's on its way up. I think it's going up to, right now at least, for the short term, it's going to make 3 subwaves, 1, 2, 3, kind of like this right here. And then another, it's going to come down. So it might go up to like 25-ish and then come down to like 20 again, or 22. And then make a wave up to like 28 or 9. That's what I'm expecting. As you can see here, it might not happen like that, but that's what I've been expecting. So we do have that 200 moving average right in the way. That's probably going to be, if it's a 3 subwave coming up, it's probably going to be the resistance is going to be that 200 moving average right there. So it might get hung up for a couple days or like a week or something right in the middle and then go up again. That's what I'm expecting, but you know, we'll see. Dogecoin to the freaking moon. Well, I don't think we're done with the correction right now, but if you were just tuning in, you should check out what I showed on the monthly chart. If you're wanting it to go to the moon, check this out. This is my potential next few years of Doge. Now, this might not happen on this time frame, but it would look something like that. Doge going to the moon. It's not going to go straight there. There are going to be more corrections in the subwaves. Let me change the color of that so that it makes sense. So there will be subwaves along the way, but Doge to the moon would be doing something like this. And for me personally, I'm going to be trying to trade the RSI especially along on these. You know, I will be selling, buying, selling, buying, selling. Ideally, that's the strategy. And then there'll be another obnoxious correction that will take who knows how long, a couple years or something, probably. And then there will be some trade opportunities there, like buying, selling, but that's more risky because it's heading down against the trend. Selling, buying, ideally selling, buying, selling, buying, selling. And if you nailed it, now I'm making it look easy, but that's the idea. If you nail it, you could make money, cash out, it drops, you buy back in and you get more. Anyway, that's my overall strategy. But that is going to take years to play out. It doesn't just magically go up. And the S&P has been magically going up, and it's going to magically come down. So I think it's got another little correction soon, and then a big, enormous correction maybe next year, actually. So maybe I'm a little early shorting it. Oh well. All right, thank you very much for watching all the way to. Oh, thank you for the thumbs up from the live people. G Goose said interesting, thanks. FPF said that looks like Doge to the sewers and to the moon. Yeah, that's kind of how the Elliott waves work. If you look back at the S&P, in the past, you know, it went to the sewers a few times in the early 2000s and then in 2008. And of course, we know you can't even see the Great Depression on this chart. Is it back here somewhere? 1930. There's the Great Depression. Right there. Ha 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 ha. I mean, I'm laughing at it. I know a lot of people suffered through that. But look at that. It's a classic Elliott wave. 1, 2, 3, 4, 5. Whoa! The fifth wave was an extended wave. Because it was just getting started. That was wave 1 going into the 1900s. And then the Great Depression was a correction. Look at it. It's right there. It's right there. And it lasted years. It took from 1929, and then it crashed all the way down to 1932, was just one big wave down, with, I'm sure, some small waves in between. That took a few years, 3 years. And then it had a wave coming up, Not so fast. 3 more waves coming back down. Wham, wham, wham. So it happens even, this is basically what Doge looks like right now. Not this yet. Just this. And then we don't know the future of exactly how the correction is going to turn out. It might not be exactly like this correction, but this is one potential shape of correction. And it's normal. And then look. Oh man, it rocketed after that. Wow. Until the 70s, and then kerplunk. 123 down to 60. It lost almost half. And people were probably blowing their brains out over it because they didn't understand the Elliott waves. It's a shame. And then, wow, that was all a precursor to all this. Wow. Insane. Well, there's 100 and 200 years of history for you. On that note, I will see you in the next video. The next video is going to be at that link in the comments. Here's the link again. It's at a different channel. I made a new channel called the Daily Doji, just specifically for doing these live streams and technical analysis, crypto videos, stock videos, investing videos like this. So if you want to see videos like this, you're going to have to go to that other channel. This is going to be the last one. I might do a couple more in the future just to help get my subscribers over to the new channel, but we'll see if everyone gets the memo right now. Go over to that new channel and subscribe and hit the bell icon so that when I go live on Sunday evening around 6 p.m. Eastern time, this Sunday in a couple days. All right, I'll see you then, and I'll answer your questions in the comments. And if you have any ideas for the next crypto or stock or index for me to do the technical analysis for, let me know in the comments, and I will do my best. Have an amazing day on purpose. Make sure to subscribe to the new channel. Thank you so much, everyone, for tuning into this channel and making it a success so far, finally monetized, and I'm really excited about that. We need to celebrate with more Doge videos. Until then, trust nature and live alkaline. Peace.